Well, here we are back at Hump Day, Hump Day, Hump Day. And I know Gino hates when I say that, but we appreciate you joining us in the National Real Estate Cafe with Don Getley and Gino Fronti, where you get your daily dose of real estate market updates.
It's not that I hate it. I just think it's old. That's so passe, Dom. This is a daily show. That was months ago.
Isn't Wednesday always Hump Day?
I guess so. I guess so.
All right, so we're going to give you an update of what's going on the current reports, because there's a lot of big headlines coming up, and you're going to hear a lot from the news, mostly about the potential Fed rate hikes. So what kind of numbers affect the potential of them raising rates or not? And here's one of them, Gino.
Yeah, we're talking about inflation. Inflation is the primary driver that drives short-term interest rates, along with the job market, as you love to point out regularly, Don. But mostly inflation, because if we don't have any inflation, there's no rush to raise rates. The rush to raise rates is to curb inflation. So one of the things the Fed will be looking at is, if we don't have any inflation, do we need to raise interest rates?
Good point. So let's look at a couple of reports that are going to affect their decision. One of them is this report right here, the housing report, showing a consistency, because that's what's really driving the markets right now, is the housing market returning, and that creates a lot of potential job, a lot of confidence, and a confidence in the builders. Now, we warned you when we saw this report last time, it was the biggest number, the highest amount of permits taken on by the builders in 8 years. So we warned you, there's a good chance the next report is going to go down, and the media's going to jump on it that the housing market is crashing.
Yeah, and I get it. It's down 16%. What an astronomical number, but from the best number in 8 years. Let's look at that number compared to a year ago or even 2 years ago, and it's still a fantastic number. So I'm okay with that. Plus, permits is a very volatile thing. It depends on so many things, so much government red tape these days that you can't look at one thing. Look at the red lines. That's the trend. It's still your friend. Permits are good, and Don, you were pointing out that housing starts were really good.
Housing starts stayed still at some of the highest numbers ever, so the housing market remains strong. Almost 1.2 million on an annual pace. That's pretty strong. That's strong as it was back in the heyday. So,
a lot of the reports we're seeing, I don't know if you've noticed, they're best in 7 years, best in 8 years, best in 7 years, best in 8 years, start to make sense. That all kind of correlates. So I'm going to call the housing market the comeback kid.
Hey, I wish my wife would say that, best in 7 or 8 years. Anyways, so here's the core inflation that we're worried about. The report comes out later today, and this is going to be the last big report that's going to probably help determine whether the Fed decides to raise short-term interest rates.
Yeah, and the reason Don made the point of the short-term interest rates is because you'll hear on the radio that the Fed's going to raise rates and rates are going to go up, and that's why you should refinance now. Well, that's not entirely true. That's not what happens when short-term rates go up. When short-term rates go up, long-term rates actually have a tendency to go down. Not dramatically, but a little bit. It's called the flattening of the yield curve. If you can get return on your investment on the short-term money that's better than it was, you'll move some of your money out of the long-term money into the short-term money. But I'm not seeing our investors move all their money into short-term funds yet. There's too much risk there.
Also a lot of global fears right now, especially with China. So be careful. We're actually going to be the contrarians and say rates may actually go down. So where are rates right now?
Yeah, rates are actually doing pretty good. They're holding in there. They're holding above the 100-point marker, which is a marker that we're looking at on the coupon to see if, they demand a premium for risk. And right now there is no risk premium. It's pretty much flat.
Everybody's waiting to see what the Fed's going to do. We're already guessing that they're going to start raising interest rate. I don't know by September because we don't have strong enough reports. They may wait till December.
This is such a weird moment. This is the moment in time where I almost hope they raise it in September, because I think most speculators in the market are counting on it. So if it doesn't happen, it'll open a whole other can of worms of why we didn't.
Especially if they do it just a little bit, that'll make them feel comfortable. They're not going to go crazy on it. So you heard it here on the National Real Estate Cafe. You can get these daily by texting NREC to 58885. That's NREC to 58885. Tune in daily to see what's brewing.